Hey everyone, it's Matt Donaghue with Mission Financial Planners, and welcome to our weekly market update. It is June already, if you can believe that. We're going to go ahead and jump into it. We're going to start off with looking at the economic pulse. On the surface, things look steady. Consumer confidence rose in May to 98, which means people are feeling okay about their jobs and finances. But looking deeper, it's a little more complicated. Second estimate of first quarter GDP shows a slight contraction down about 0.2% on an annualized basis. In a service driven economy like ours, that's a red flag, not panic worthy, but still something to just watch. Meanwhile, inflation continues to cool off. Headline inflation rose just 0.1% month over month, and it's sitting at 2.1% year over year. So the Fed is close to their goal, but it's not quite time to celebrate yet. The Fed is still walking a tightrope between preventing a recession and avoiding a premature rate cut. Um, Speaking of rates, let's talk housing for a little bit. And here's the truth. It's a difficult market for buyers right now. In April, the median price of an existing home hit just over $413,000. That's up over 45% from just 5 years ago. Brand new homes still over 400,000. And it's not just inflation, it's also structural. We're short about 4.5 million homes, according to Zillow. And when you think about the last 15 or 20 years, there's been a lot of things that have contributed to that. There's underbuilding after the last financial crisis. Costs have gone up, right? Inflation was high, labor shortages. None of those are quick fixes. Millennials are hitting their prime buying age, but they're running headfirst into higher interest rates, tighter lending requirements, and sky high prices. The average first time home buyer is 38 years old. That's a full decade later than it used to be. So, what do people do when they can't buy it? Well, they rent and they rent for a longer period of time. And that is driving a lot of demand for multifamily housing and fast. Apartment construction is booming, and unless rates fall hard or we suddenly build millions of homes, this trend isn't going anywhere. That means investors should keep their eyes on multifamily and rental markets, not just the white picket fence. So let's zoom out. Getting into philosophy here for a second, Marcus Aurelius once said that the best way to understand people is to take the bird's eye view, to look at life from above and see everything all at once. So, ancient poets wrote about this. Astronauts have talked about this, right? Edgar Mitchell said that, hey, from a quarter of a mile or a quarter of a million miles away, Earth's problems are pretty petty. He said it gave him a sense of a global consciousness and a compulsion to fix things. So, what if we took that bigger, broader view at our own financial lives? Housing shortages, inflation, taxes, none of that stuff's permanent. They're just part of the terrain. Now, back here on Earth, though, short term, right? Nothing spikes anxiety quite like a letter from the IRS. And for those of you who have received those letters, you know what I'm talking about. Keep in mind, when you get a letter from the IRS, don't panic. The IRS sends millions of letters or notices each year. Some are simple, some just mean you're going to get some money back, others are corrections or requests for more information. If you disagree with what you're seeing or what you get, respond. If you're overwhelmed, get help. CPAs, enrolled agents, tax attorneys, they speak fluent IRS. So remember, also super important, the IRS doesn't call you. They don't DM you. They don't text you. They only send notices via mail. So if you get a phone call, a text, or a DM from someone claiming to be with the IRS, they're not. Okay, they're not. So shifting gears a little more and speaking about planning, right? Let's talk about estate planning. We're going to have a big focus on estate planning this month. Legacy, as you all know, those of you who know me, know that I do not believe legacy is just dollars and cents. It's also how you're remembered. But way too many skip their estate planning. And for a lot of people, it's just you don't want to think about dying, right? And I get that. But the reality is, if you haven't done the planning, you leave your family a mess. So, what should you have? And you're going to hear a lot about this from us in June. We have a new relationship with a firm called wealth.com that's does a lot of legal planning. Couple things to keep in mind. You do need a trust. You do need a will. You need a medical directive. You also need a durable power of attorney. You just do. And that stuff is not for just wealthy people. That's for everybody. Make sure you're not leaving a mess behind when you pass away. One other thing, that's the legal side. Of course, don't overlook the emotional side. A legacy letter, a property memo, a family plan, a video saying what you want or hope happens, right? That will help your family find a little bit of clarity, not just conflict. So if you own a business or have a succession plan, right, it's super important because now you have those business partners in the mix, right? make sure everybody knows your intentions. Make sure you've done the planning, not just for your personal life, but also for your professional life. So where does all this leave us? It's a lot this week, right? The data ahead, jobs, manufacturing, inflation, it'll guide the Fed, help shape markets, but you don't have to ride every wave of the news cycle. You need perspective. Think about these ancient philosophers, Marcus Aurelius, Plato, astronauts, right? When you zoom out, you see patterns, not panic. With the right plan, volatility becomes manageable. Housing gets reframed. Taxes become navigable. Your legacy becomes intentional. So if you're ready to zoom out, make smart decisions, and lead with clarity, visit us, go to our website, missionfinancialplanners.com, book time directly with either me, Jason, or Ken, the three managing members here. We'll help you to build wealth that lasts and a legacy that matters. Thanks for watching. We'll see you next week. Stay focused, stay prepared, and stay grounded. See you next week.